Hey everybody, this is Jim at SP500chart.com. It's about 4:45 on March 20th, 2013. What is tomorrow, the first day of spring? Or is it astronomically at some point during the day today? I'm not sure. But very close to spring and looking forward to some nicer weather. Even though I'm down here in the southeast, we can still use some nicer weather. But let's take a look at the chart using some time-honored techniques to understand these modern markets. And before we do so, as always, I've got to read the disclaimer to you. I'm going to try to do it again in one breath. I was successful doing that over the weekend. I'm going to give it another try. The website and the video are for educational purposes only. Nothing stated in the site or in the video is intended to be used as investment advice. I control lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not going to make it. That's it. That was my first breath. But I'm still not a licensed financial professional. I'm just a guy who draws lines on charts. Let's take a look. Well, here's the kicker, and how many times have we seen this, where we're waiting for the market to give us a buy signal, and it does so in such a way that at least right off the bat, it's something we really can't get involved, at least we can't safely, by the textbook, execute the trade. I'll give you an example. We had this inverted head and shoulders back here that's in the gray circle. It broke out. It gapped up. So where do you trade? If you're waiting for this pattern to confirm and you gap up to 1540, to the low 1540s even, and you have a target of 1565, you've already given up about a third of your target on the gap. So it's kind of like, well, gee, I'm going to wait. Then you get close enough to the target to where now you're wondering, well, if it does pull back now, can we reasonably expect the target to hit again? So it's really sometimes difficult. And one of the reasons this is difficult is because we are dealing now with smaller and smaller and smaller targets. As I've shown you on a longer term chart, as we look at what's taken place over the past 4 years, we had this big honker. I don't know if that's a technical analysis term, but I'm going to stick with it. We had this big honker pattern back here that had a huge target all the way up around 1350. It's not going to gap up to 1350. It's not going to gap up to 1100. Instead, it breaks out, then it pulls back, and then it slowly works its way up and down with little targets along the way. And all the while, we could keep in mind for many, many months that we have a target of 1350. The pattern that we just took a look at right here took 9 days to create. The target we looked at that was this big honker inverted head and shoulders pattern took 9 months. So we're seeing smaller and smaller patterns. And that means that when you get these gaps up, it's more difficult to trade based upon what the smaller pattern is showing you, because the small pattern just doesn't produce the same kind of impressive target. So right now we did break out and over our little orange top line here, and again, there's this line doesn't have much history to it, so I'm going to make it even lighter because it's not extremely dependable. It could serve as some support if we come back down to test this level anytime soon. If we don't test this anytime soon, it may not even be in the picture, because if we go sideways up for a while, then this line would be headed down at a fairly decent pace. So this may not even come into the picture down the road. But I remind you, we still have this target line up around 1565. And remember, I talked about it over the weekend. I said, we get this move to about 1563 and change. I'm willing to say with that move that this pattern down here has fulfilled its minimum target, but it seems as if 3 times out of 4, when I kind of fudge a little bit and say, yeah, let's call this the target. Let's say we met the target at 1563 and change. We didn't have to get all the way to 1565. You'd be amazed how many times later there's a little sell-off, and then the market comes back and meets or beats the minimum expected target. And it's kind of looking like we may be in that process right now. We still have the same, I believe, the same resistance and support lines that we had yesterday, with the exception of getting over this little line right here, which, again, that's not a critical or crucial thing. When we look at a line such as this that has such a history going back for a couple months, and then we break underneath it and have trouble really mounting an attack to get significantly over it, I think we can, and then we sell off again. I think it is safe to say that this red line, though it is ascending, should produce resistance. So that means if we get up and tag this line tomorrow, the next day, a week from now, whenever it might be, that line should serve as resistance. And conversely, if we start to come down, then I think this neckline will serve as support. We also have a rising line right here. Here it is. I think that line would likely offer some support as well. Now, we want to typically go long at support and sell at resistance. But keep in mind that when you have a rising support line, it's just a matter of time before it breaks. When you have a rising resistance line, it usually doesn't break. When it breaks, when they break, especially if it is a resistance line that is served as the top of a channel, then that may be a warning sign that you're getting some climactic buying, or a what some people might call a climax top or a blow off top. But right now, I'm looking at this red line extending out into the future, which we will extend it a little bit more if I can grab the handle. Forget it. I'll grab it tomorrow. That we should see this line serving as resistance, and we should see this line serving as support. So really, that's about it, guys. There's not really anything on the 5-minute chart that I see. I could maybe make something up, but I don't think that's really that good of an idea. So let's just let the market work this out and show us a little bit more tomorrow. I think if we get above this 1563 and change resistance, which was about right here, you might say, well, could this maybe be a little inverted head and shoulders? It might be, but I think it would have a tough time getting up over this line. So if it is going to turn into that kind of pattern, I believe we got a few more days for this to develop before there's enough headroom for this to head up much further. Finally, if we back out on this chart to a 9-day chart, just to remind you of the big picture, and get rid of my black line. Look how close we are. Come on, there. Look how close we are to this line that has served as the top of the S&P 500 both in 2000 and 2007. You have to ask yourself, does that mean that this will be a top again in 2013? I think that is certainly something that is worth considering going forward. That this could be a big triple top in the making. So we'll just have to see when we get there. I have thought all along that we would eventually get there, and it sure looks like we're headed there now. So guys, let's just keep our eyes on this, and remember these little arrows. Those are the beginning of May, because you know what they say, and I don't believe in things that rhyme necessarily just because they rhyme, but they say sell in May and go away. If you had done that for the past 3 Mays, you would have been in great shape, because May 2010 was almost exactly the temporary top of that year. It later recovered and came back and closed that year a little higher, but we had an inverted head and shoulders pattern down here to clue us in. So if you sold in May and went away and then bought back after this pattern confirmed, you were in good shape. What about here? Well, again, almost exactly the top of the market in 2011. 2012, a little different story. May was actually a nice back test on a broken trend line, but still a good place to get out. Let's see what happens here. So this is fun, guys. This is getting interesting. Again, I wish we had patterns that gave us a little bit more observation room so we could make up our minds what we wanted to do. Looking at, there's that red line. That's that big long-term red line right there, so close. This is a line that could be hit in just a matter of weeks. So guys, that's exciting and certainly interesting. So I hope you'll stay with me going forward into the rest of 2013. I want to say thank you to new subscribers for your support, and I do appreciate each and every one of you. And hope you, honest to goodness, my goal is not to prove myself to be smart and right. My goal is to help you with some of these older style chart reading techniques. And I hope you learned something from this. Thanks a lot. Take care.